Good evening and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang. Today, of course, is October the 20th, 2024, and we have been a very busy week. And today we will be covering what transpired over the past week and what may happen in the coming week itself. So now, without much delay, let me continue. And of course, I want to acknowledge INFX for being the sponsor of this webinar itself. And INFX has been around for quite some time, from 2010, and they have operation in 180 countries around the world, and they have been one of the more reliable brokers that I know of. And of course, their suite of asset classes available for retail investors has been quite varied, and I like it because they are one of the very few FX brokers that offer crypto trading round the clock, and it is something that I do look forward to. Okay, and of course, has to be this disclaimer has to be said, and this presentation is definitely not an offer to buy or sell any kind of securities, be it FX, CFDs, crypto, and of course, the trading of any kind of margin product do carry a risk. Do understand your own risk profile before you attempt to trade any kind of margin products. And I'll be sharing with you my views on the various markets. And do note those are my views, has got nothing to do with the sponsor. And of course, the content of this presentation has not been vetted by any regulatory body. Now, with that out of the way, and of course, we want to know what happened over the course of the week. And we knew last Friday, and what happened was there has been rising tension in the Korean Peninsula, largely because North Korea has accused the West of flying military drones over Pyongyang, which is the capital of North Korea, and that has actually raised tension to the point whereby North Korea has actually blew up the only highway connecting the North and South Korea. So both sides now has been on very high alert, and I have been reading news that as many as uh, uh, 19, okay, 19 nations has actually have troops based in South Korea for a massive military exercise. And I also read that over the course of the last few days, 7 of them has actually withdrew. But the fact is, Korea for the very first time has allowed a Japanese troop to be based in South Korea, and this has actually raised the tension somewhat. And we can see that this sequence of events to me is no coincidence, because we knew what happened, because China has actually launched another series of a stimulus package. And I think there is the undercurrent in which I suspect the West has been trying to undermine capital flowing into China. As we have seen, Chinese equity market has been on a very hot streak for 3 weeks leading to this week itself. Then, of course, on Friday, China actually launched another round of stimulus package, which resulted in the Hang Seng Index rising more than 3.5% on Friday alone. So we want to keep all this under wrap, and there will be tension going into what will be most likely the very consequential US presidential election, which is scheduled on November the 5th. So we have about less than 2 weeks now towards the US presidential election, and it's likely to be very, very consequential in my opinion. So keep your eyes peeled for events leading to that November 5th US presidential election. Okay. And this is what I want to show you. On Saturday itself, we have China launching another round of stimulus package. And this is on top of the one that they have actually launched 1 week after the Federal Reserve cut interest rates from 5.5% to 5%. Now, the content of this latest stimulus package is basically to elevate the property market for one, because they are allowing the local governments to actually issue special bonds, okay, to in support of their activities. And this is a large-scale swap program in which they will be allowed to raise money through the issuing of local government bonds, special bonds, okay? And this is, of course, to support the property market, as well as to recapitalize large state-owned banks, which has been under a lot of stress. And of course, they will be issuing special treasury bonds to bolster the core tier one capital on major state-owned commercial banks, improving their ability to withstand a shock, and of course, to provide credit to the real economy. And the bulk of it is basically also to help out the low-income students who have been struggling with their education, and this will be something that hopefully will filter down to the local levels in which there will be more stimulus package. And of course, this will not be the end of it, because we can see that China has been very determined to actually refloat their economy, which has been in the doldrum for all these years since the start of the trade war between the United States and China. Okay, so we can see Chinese equity markets are coming back in a big way, and I think there will be focus on Chinese equities, including those in Hong Kong. Now, again, on the topic of China, we have the CPI numbers coming up from China. We can see that CPI is still basically quite benign. Okay, we can see that the previous month of July, we have the retail sales. So I'm so sorry, this is supposed to be retail sales. Retail sales is 0.6. So we can see retail sales is still not coming back in a big way. It has actually shrunk from the expectation of 0.6 to 0.4. So we can see retail sale is still very much in the doldrum. There is very little demand in the local economy as far as China is concerned. So this will be a concern. So I think all these rounds of stimulus package launched by the People's Bank of China is basically to try to refloat the Chinese economy. And over in UK, we can see that the labor numbers that came in is a lot better than market expected. The claimant count, of course, is the number of people who need state assistance since they have lost jobs or they are unemployed temporarily. So we can see that the number is actually edged higher. Previous number for the month of August was 23,700 people who need help, and the expectation that there will be a downtick to 20,200. However, the number of people seeking help has actually edged higher to almost 28,000. So this is on balance not a good thing. And we can see the employment change. Now, this is good. This is not the unemployment. This is the employment change, meaning say the number of jobs created. Okay, previously in the month of July, it was 265,000. No expectation this strong, but the number that came out for the month of August was 373,000. So this is all good. We can see that from the chart on the right, the number of people that is under in gainful employment has actually been the highest since 2022. So this is definitely a good sign. However, we want to see whether jobs created will lead to higher expenditure, because at the end of the day, you need people to start spending in order to consolidate the gains. Okay. And this is the unemployment rate. You can see in a corresponding way where there are more jobs being created to the tune of 373,000 jobs for the month of September. We can see that the unemployment rate has actually eased back from a high of 4.4%. It has been steadily been coming down over the last 4 months, and we can see that current level is at 4%. So this suggests that there are more employment in the UK economy, which is all good, okay? Then we have Canada, where we have Canada. We have two sets of numbers. Both are basically to confirm the CPI, which is the inflation situation in Canada. We can see that from both graphs, the line chart here, you can see that the number has been gradually been going down, and this is always good because we can see headline numbers in terms of inflation has been decreasing very steadily since the high traded registered in June of last year, okay? June of 2022, sorry, not even last year, two years ago. So we can see BOC, which is the Bank of Canada's CPI numbers year over year for the month of September had inched up a little bit from 1.5 to 1.6%, whereas the headline numbers is from 2% down to 1.6, which is even better than the expectation of 1.8%. So we can see in Canada, inflation is definitely easing a little bit, whereas the Bank of Canada's CPI numbers has actually started to perk up a little bit, but only marginally, okay? New Zealand CPI numbers, we can see New Zealand CPI numbers, again, there are two sets of numbers. One is quarter over quarter, which is the green bar that you see. So by and large, we can see that on a quarter basis, inflation appears to have reignited again from the previous quarter of 0.4%, currently is up 50% at 0.6%. So on a quarter basis, it does appear that inflation is coming back. But on a year-over-year basis, we can see the trajectory, which is the the brown line that you see in front of you has been coming off very steadily. So this is more important because the year-over-year number is definitely the number that we want to watch. Currently, it's at 2.2% with an expectation. So this is a major markdown from the previous quarter of 3.3%. So it's all good for as far as New Zealand is concerned. But I think they are going to continue to cut interest rates because New Zealand is definitely one of the very first central bank to hike rates even before the Federal Reserve does so 6 months before the Fed. Okay, so I think the New Zealand central bank is a lot more proactive, and they have decided that they need to increase more economic activity in the economy to boost economic output. And over here, we can see the UK CPI numbers, and we have a few numbers here. We have month over month, which is a lot more volatile, which is the chart on the left here. You can see that inflation has gone down to zero, which there has been no increase. Previous month of August, it was 0.3. Market expected to dip to 0.1, but it was even better because it was at zero. Now, the year-over-year number is the number that we want to watch, which is the chart on the right here. Market was expecting 1.9% from the previous August of 2.2%, but now it has gone down even better than expectation. It's only 1.7. Now, the year-over-year core CPI numbers, meaning to say you take away the component of energy and food, which is considered to be volatile. And we also see that that number has also been improved upon. Previously it was 3.6, market expected 3.4, now it's only 3.2. So whether you're looking at China, whether you're looking at Canada, and even New Zealand, we can see that inflation globally has been coming off. So this has been a trend, and this is allowing central banks around the world to start easing on interest rates, which has been the case since 3 months ago. We are beginning to see central banks are beginning to unwind their very, very strict and very aggressive interest rate cycle. And now everybody is expecting more to be done on the interest rates. Means to say that the sentiment here suggests that market participants are expecting more cuts by central banks. And this should be seen generally to be bullish for equity markets, which has been the case, okay? Now, we also knew on midweek itself, Israel actually assured US that they will not target Iran's oil field or even a nuclear site. So I think this is an improvement, although there is that fear that Israel may still attack or rather retaliate against Iran's attack on October the 1st. And because the market was fearing that if the Israelis actually target Iranian oil field, it will cause energy prices to spike, and you may undo all the goods as far as inflation is concerned. And of course, if they hit their nuclear site, that means to say it will be a totally different paradigm, and there is that risk that other countries may be drawn into this fight, especially Pakistan, okay? So we can see that the assurance given to the United States by Israel say that they will only target their military site actually is a step down in terms of the tension between the two. However, the fact that Israel has yet to retaliate 3 weeks after being attacked by Iran goes to show the amount of constraint or restraint that has been put on Israel by the United States. And of course, we understand why, because we are only 2 weeks before the US election, and definitely the United States would not want to see oil prices start to escalate during the midst of this election. So there is a lot of political concern here, and the calculation is that once the election is over, there is very high likelihood that Israel will carry out their retaliation against Iran. Now, Iran has also mentioned that if Israel retaliate against its attack on October the 1st, Iran may actually launch another wave attack, and this is going to be a no-end stop to the war. So again, this tension will not ease just because Israel decided that it's not a good idea to hit their oil field and their nuclear site. Okay, so this tension will linger around, and we will see what happens. Next, we have the Australia Labour Report. We have employment change, and we can see that the number of jobs created has actually increased, although there was a downward revision for the previous month of August from 47 42,500 to 42,600. But the expectation is that there will be less job being created for September. Market was expecting 25,200 jobs, but the number came in so much better. It's even better than the August number, came in at 64,100. So this is definitely a good sign. And of course, the unemployment rate has also eased back. So by and large, it's definitely a good number. But still, we can see that Australia labor market is still not out of the woods, okay? Because 4.2% to 4.1%, anything above 4% is considered to be high unemployment rate. What they want to see is to bring down this rate down to about 3%. So from 4.1 to 3%, we are very far away from that. And by the way, we can see the chart on the right, the Australian unemployment rate has been on the up and up for quite a while, and it looks like this momentum may carry forward, okay? And ECB actually cut interest rates. This is also expected. The ECB, which is the European Central Banks, have two key rates that they have to adjust. One is the main refinancing operation rate, which is the wholesale rate from 3.65%. They cut down to 3.4% within expectation. Likewise, the rate on deposit facilities from 3.5% has been cut by a quarter point to 3.25. So both are expected. We can see that the rate cutting cycle has already begun 2 months ago when the ECB start to cut rates. So we can see this is a continuation of that cycle. Retail sales in the United States has been very, very robust. Now, this comes as a major surprise because I wasn't expecting such a robust number. Retail sales is what we measure before the GDP, which is the gross domestic product. I've always mentioned US is a consumer society, and if consumer don't spend, and that means the GDP cannot expand. But here we can see retail sales on a month-over-month basis from 0.1% has bumped up to 0.4%, which is even one touch higher than the expectation of 0.3. So I have looked through the report itself, and it seems that this retail sales increase has been driven largely by those who make money from equity markets. We can see both the Dow Jones and the S&P 500 has been on record high 6 weeks in a row. So I think the expenditure has been driven by those in the higher end of the income bracket, not so much on the ordinary folks, okay? We can see the retail sales control group, meaning to say you take away certain component of the retail sales, it is also more than doubled from 0.3 to 0.7%, very, very robust. So if this number is to be believed, that means to say that going forward, the GDP number should actually be very, very good into the last quarter of this year. So based on what we have known so far, retail sales is very supportive. So that is also feeding into the feel-good sentiment in Wall Street, meaning to say the economy is doing okay, and there may not be any land, meaning that this is a situation in which the market is just 2 weeks before the before that what you call that U.S. presidential election. There's a couple of no sound. I'm so sorry. Can you hear me? Okay, can you hear me now? If you can you just let me know? Can you hear me now? Okay, good, very good. Thank you very much. I think that somebody put out a thumbs up. I'm so sorry for not seeing your question. All right, let's continue. Now, as far as China is concerned, their GDP release for Q3 has been strong. Okay, their target has been to do 5% this year,
we have one more quarter to go before the year end. So based on Q3, quarter on quarter, the number came in 0.9, which is better than the previous quarter of 0.7, although it came in a touch lower than the market expectation of 1%. But on a quarter over quarter basis, previously was 4.7, now it's 4.6, which is not ideal because, like I said, their target is to do a year over year GDP of 5%. So their target is a little bit out of touch. Like I said, we only have one quarter left before the year end, and it is still not sure whether they can hit the 5% target. Okay. Let me see. There are a couple of questions here. Let me address that. Okay, I think it's okay. Right. Let's continue. Now, China industrial production. Now, this is something that we want to watch because whether the Chinese economy do well is also going to be reflected in the amount of economic activity in terms of production. Okay, so industrial production year over year for the month of September has been very healthy. Previously was 4.5%. Market expect only a marginal improvement of 4.6%, but it came in at 5.4%. So this is actually quite spectacular. 5.4%, meaning to say now we are back on the growth path. Okay, so long as it is above 5%, I think that should actually play out very nicely as far as the GDP is concerned. The only question right now is their retail sales. If only their retail sales also picked up pace in tandem with the industrial production, that will be very, very good. Okay, but again, we do not know for sure because we know domestic consumption has been a little bit on the back foot. Okay, so retail sales come in a lot better. Okay, so the retail sales for the month of September, market previously was 2.1, market expected 2.5, came at 3.2. So now we have two sets of number confirming there is a bit of growth coming in for the month of September. Of course, now we are in October, and October we only have less than 10 days left before the end of this month. So if this number can carry the momentum through, then October should also see a set of very positive number, and this will be actually great in terms of the overall GDP target of 5%. So we can see 3% is definitely not something to laugh about. It has been at about 2%, and now he has cleared 3%. So it's all good. Okay. Now, back to the UK, we can see retail sales has actually shrunk. Previously, it was 1%. Market was expecting a negative result or negative 0.3. So it wasn't as bad. It came in positive 0.3, but 0.3 means it is basically struggling. So as far as UK is concerned, retail sales has not been that positive, but it wasn't negative. Okay, so on hindsight, we can see that as a positive. But again, we can see by and large, the UK economy, as far as retail sales is concerned, it is still in the doldrum. Now, China roll out a $112 billion funding exercise to actually bolster the stock market. So we can see going forward, perhaps on Monday itself, there should be buying coming in, especially in Hong Kong, because Hong Kong has actually reacted very positively on Friday when this news was flashed across the screen. So we can see that Hong Kong has been the beneficiary of all this stimulus package. And I think I get a sense that the Chinese government is definitely very determined to actually continue to pump stimulus into the Chinese equity markets, and by extension, this has also seen the filter through into Hong Kong market. And we have always knew that foreigners cannot directly participate in Chinese equity, but they can do so through the Hong Kong Connect, meaning to say you have to buy through Hong Kong. So that has been the peculiarity of investing in Chinese equity markets. Let me check if you have any question for me. All right, well and good. If you have any question, do remember to pop them into the Q&A so I can address them. Okay. So let me go into the chart itself. Okay. And of course, for those who have been following me for quite some time, because INFX has been sponsoring my event, so I have to use their platform to show you the various markets. And I can only show you markets in which INFX is making available for retail trader to trade. As usual, I will start off with US equity markets. And here we have the Dow Jones. Now, Dow Jones is again at all-time high. This is the monthly time frame. You can see this is an all-time high. And this is the week after week, we can see the market has been running for the last 4 weeks, okay, in the Dow. And we can see that has last 4 months, not last 4 weeks, last 4 months, we can see that the Dow has been on a tear. And based on momentum, it does seem that the ADX is climbing, and that is more or less supporting the idea that this market is very well beat. There is momentum behind this rally here. But again, we want to be very careful going into the last leg of the US presidential election campaigning. Market has already, in my opinion, the market has already decided who is going to be winning this election. The fact that the banking stocks are doing well and crypto is also doing very well suggests that the market has actually voted the likelihood of a Trump victory. Okay, this is how I look at the markets, because Kamala Harris' policy is actually a bit of a negative because of her taxation platform. Okay, but Trump also is not necessarily a good choice for the economy, because he said if he come back to reoccupy the White House, he is going to slap tariffs across the board on Chinese imports, and this will be inflationary, okay? Because at the end of the day, despite what Trump says, tariffs are actually paid for by US consumers, and this is definitely going to be a bit of an inflationary going forward, okay? But when we look at the weekly time frame, we can also confirm that the momentum in the Dow Jones is also very, very strong, okay? There is a equality target here, about 42,400, based on the equality move of this low from 18,219. And because of this symmetrical look here, there's a likelihood that the immediate target could be around 42,400 in the Dow. So based on where we are right now, there is a possibility. Sorry, 47,400, not 42, 47,400. So there is about maybe another 4,000 more points to go if this target is going to be hit. Based on what we see so far, momentum is behind this rally here. So do not stand in the way of this bull market in the Dow. And one of the reasons why I see that the Dow has also been rising in tandem with the rise in the dollar, I see as a capital flow because of all this tension, because over the last, throughout the whole month of October, the fear is that Israel will retaliate against Iran and hit their oil field. And that has caused capital to flow into the United States, because if there's tension, usually investors will want to seek out some kind of safety, and the dollar has always been the go-to currency if there's going to be a hedge against rising geopolitical tension. And those money has found their way into the equity market. So I think the fear of escalation in the Middle East has caused the dollar to rise, and that has also resulted consequentially into money flowing into US equity markets. And of course, it is also bolstered by earning reports, which shows that most companies like NVIDIA has been doing very well, and that may actually be underpinning the stocks, okay? So we can see that on the daily time frame here, this is the daily time frame. You can see that market again closed on the high. This is the highest close we have ever seen, 43,285 on Friday. The high traded is 43,331 in the CFD contract. And again, we can see this ADX is climbing, suggesting that maybe going forward, the bias is still on the upside. On the lower time frame, like the 4 hours, we also see that have been happening. Immediate target is about 43,356. You can see this horizontal dotted line, which is the nearby target here. Of course, these are a projected target. The only time this time frame allows a buy position was over here. Okay, we can see back in the end of July, that was the only time where the market retraced in a three-wave pattern, go into this very deep retracement levels here. And that was the only time you can buy. And that was 38,389. And the market has not looked back since. So don't need to see the 1 hour, because I think it will be a confirmation of what we're seeing the 4 hours. So the conclusion here is that the Dow appears to be very well supported, at least in the meantime, okay? So when we go down to the S&P 500, now remember the Dow is a big index tracked by the money managers, not so much by the retail, but we can see that the S&P 500 more or less mimic what we are seeing in the Dow, okay? Again, the S&P 500 on a monthly time frame is trading at a high, 5,881.4 on Friday being the high, and the market closed at 5,864.1. Again, this is the highest we have ever seen. And instead of going up 4 months in a row, this market has been going up 5 months in a row. So we can see of late, the S&P 500 has been mimicking the very bullish move in the Dow. Okay, on the weekly time frame, we also see the same thing. There's a new question here, I believe. Let me grab this question first. Wei Ren says, will the weakness in the euro be further exacerbated after the rate cut and weak inflation data? Also the strong dollar. Okay. Okay. The rate cut by the ECB, which is the European Central Bank, is not a surprise. I think they will cut further. So there is a different dynamics. Okay. Right now we are looking at the US equity market. So which is quite common. Most investors are really focused on the US equity markets, but you know, the US does not live in an island, okay? Meaning to say that we also have to take into consideration what is happening outside of the United States to also take the bearing. We can see that equity markets in Europe, especially the stocks, okay, has not been doing too well. Now, stock is another major equity index other than the DAX. Later on, I will visit that and I'll tell you why I think based on risk reward, it's becoming very attractive to look at European equity index. Okay, later on, I will cover that, okay? But as far as the US equity market is concerned, it does appear to be very, very strong right now. We have momentum behind it. We can see ADX has beginning to climb again. You can see here on the weekly time frame, we're beginning to see some uptick in the ADX. And this suggests that if this continues, there's a very good chance it will continue to roar higher. Okay, at least until the US presidential election is over. Okay. So here is the daily time frame. Okay, the daily time frame is also confirming the ADX is climbing, meaning to say the momentum is still behind buyers. Okay, the buyer is still having the upper hand and it may extend a little bit higher. Immediate target on the daily time frame is 6,130 thereabout. So it's just not that far away. So if we have a bit of upside left, I will not want to chase this market at this current price itself. But for those who are doing intraday, you just got to be a lot more nimble. Always tighten your risk profile while you're chasing the market ever higher. So this is the 4 hours. 4 hours has begun to show a counter trend in place. This is the result of a pullback from the high of 5,881.4 in the CFD contracts. Now, remember, these are short-term 4 hours time frame. So we are beginning to see a bit of a counter trend emerging. This may result in a short-term pullback to maybe 5,008, and then the overall trend is still very much favoring the upside. So be very careful if you're going to sell this. Tighten your stop no more than 5,881.4. Okay, so if the market take out this level here, again, for those who are selling it, okay, just be very careful. I would suggest that I do not want to hold any short position above 5,881.4. However, if you are very, very adventurous and want to do a counter trend trade, just be aware that the downside target is possibly around 5,803. Okay, so there's on balance, there is that possibility of further pullback. You can see if this is the case, this could end up as a 3-wave pullback, and the target at 5,803 could be your immediate target. Now let's move on to the Nasdaq 100. So here we have the Nasdaq 100. We can see that this is the monthly time frame. Now the Nasdaq has not been breaking new highs, unlike the Dow or the S&P 500. It has already has a counter trend in place since July the 10th. Okay, we can see since July, there has been no new high in the Nasdaq 100. Does it suggest that the tech rally is over? Very, very much so, because I think the tech has been leading the market higher even before all these talks about tension growing in the Middle East. So we can see that the tech stock is taking a bit of a breather. There was a bit of a sharp pullback from 20,758 all down to 17,238, which is a relatively sharp move here. Okay, that was a 3,000 point move downwards, and the market is still trying to recover, to retest this all-time high here at 20,558. But based on what we have seen so far, you can see the individual bars, the trading range for the month itself has actually decreased. Now, based on what happened in September, the bar visually, you can see the trading range, the high and low, is a lot wider than this month. Okay, so it just shows that momentum is a little bit not there. Then this can be seen in the ADX on the monthly time frame. You can see ADX, unlike the S&P 500 or the Dow, is not climbing. So there is the possibility tech stock is not where the focus is right now. Okay, and here in the weekly time frame, we can see that in the weekly time frame, the ADX right now is fluctuating within the counter trend, and now it looks very, very attractive to do counter trend. So if I'm going to take a view, then I will say trading counter trend by selling, okay, putting a stop just above 20,758.3 offers a much superior risk reward ratio. Okay, because if this is the area to sell between 20,005 to 20,758.3, this bracket actually offers a superior risk reward ratio because the objective is for the market to come back and test the 15,000. So we can see that is a big drop, almost a 5,000 points potential when we are taking a risk of less than 700 points based on the high traded on Friday. So if we are prepared to risk 500 points in exchange for 5,000 points, I think it's very much, this is not even 500 points. This is only about less than 300 points, okay? In exchange for 5,000 point potential, I think this is very attractive, okay? Just be careful. And there is no risk that this market is going to run away because the ADX is not climbing. So for those who want to do counter trend trade, I think the Nasdaq 100 does looks very, very attractive. Now on the daily time frame, you can see that the market also has a counter trend, although the move that came in here, now the dominant trend has flipped into positive. So on the lower time frame, it still looks very, very attractive. Okay, basing on what we see in the weekly, I think it is still very much a superior risk reward perspective. Okay, and in the 4 hours, let's take a look at the 4 hours time frame. Again, we have counter trend in place. So for those who are trading very, very short term, you can actually try to sell within this bracket of prices between 20,400 to 20,500, take a 100-point risk in exchange for the possibility that the market will go back down in the 3-wave pullback to test the 19,800. So again, based on risk reward ratio, it is superior. 1 part risk against maybe 4 parts, more than 4 parts potential reward. So 1:4 is definitely something we want to consider. Yes, the ADX is beginning to climb, but again, you can see the individual bars are very, very small. Okay, and that means there is hardly any momentum behind it. So the way I see it, if this continue to be the case, I think there is a very good chance market may come down in the days going forward. Now, I don't need to look at the 1 hour because I think it has already given me quite a good idea where I think the market is heading. Now, let's take a look across the Atlantic. Let's take a look at the FTSE 100, which is the British, the UK stock index. You can see that again, very much like the Nasdaq 100, the FTSE 100 has not had new high for 6 months now. The last high here was 8,477.3. So the market has actually gone into this whipsaw, but basically a counter trend is in place, very much like the Nasdaq. Here I can see that the ADX has already peaked and starting to come down. So that also suggests that maybe there is some kind of a counter trend trading opportunity as far as the FTSE is concerned. Okay, so if you're not comfortable selling the Nasdaq 100, maybe you can look across the Atlantic and try to see if you can do anything on the European continent. Okay, here we can see the market has been bunching together. This is the weekly time frame. Okay, the market actually marginally pierced into this bracket of prices, which is confined between 4,448 to 4,477.3. So again, this bracket where this let me expand this chart so they can see better. Okay, so you can see this is where we are right now. The market actually on the high last week, this past week has actually brushed against this level here, 8,400 thereabout. Okay, so it offers that possibility of going short in exchange for the possibility of market coming down to retest this low at 7,009. Okay, the target here is 7,884. So it's actually a very good risk reward ratio. Always keep in mind that any price beyond 8,477.3 will suggest that this counter trend trade is not working out. So you have to make sure that if I'm going to sell, for example, then I want to put my stop above this level. Okay, on the daily time frame, same thing here. It is also showing me the counter trend is in place. So I have counter trend in place in the monthly, the weekly, the daily. So everything seems to be pointing to the fact that maybe counter trend may be worth our while trying. Okay. So again, if I'm going to be looking to sell the FTSE, this current price where the market closes on Friday, 8,367 is actually still very, very attractive. Okay. In the lower time frame, same thing here. We have market trading into what we call the very deep retracement levels in both monthly, weekly, daily, and the 4 hours. So this suggests that this market is not going anywhere, okay? And again, ADS is not climbing. So I think selling is a lot more comfortable. So this is just my opinion. So if you think that this is also something that you want to consider, do your own analysis, okay? Now, let's take a look at other equity index, maybe like the DAX, which is the German index. Now, we know that Germany, although the inflation has come off, okay, but still it doesn't justify their equity index at record high. The DAX is currently trading just under 20,000, where it is the high traded past week is 19,681.1, which is a record high. So again, based on technical outlook, the market does not seem to want to come down just yet, but there was a period here where the market has actually peaked. Okay, can you see this? That was 3 months ago, but the market has not flipped. Okay, it is still trying to go higher, but I do not trust this latest 3 months of rally here because the fundamentals are all on the wrong side. Okay, when we look at the weekly time frame, okay, ADS is climbing, suggesting that maybe it will continue to chart even higher. But again, I'm looking for weakness here. Unlike the FTSE 100, there is no counter trend in place. Both in the monthly, the weekly, there is no counter trend. So do not sell this index just yet because we have no sign that the sellers are in the market. Okay, unlike the FTSE. Now, this is the daily time frame. Same thing, there is no counter trend in place. So on a relative basis, I would think that the German index is a lot more stable than the FTSE. Okay, so given the choice between these two major index, I think if for those who are keen to do counter trend trade, maybe they should look at the FTSE instead. Same thing in the 4 hours. Let me see the 4 hours. There is a bit of a counter trend trade, but it is still very tentative. There is no saying that the market is going to topple, okay? Because the ADS is climbing. So there's a very good chance the high here that we saw at 19,681.1 may be taken out subsequently. So this is not a good candidate to be selling, unlike the FTSE, okay? Now this other one is getting me excited, okay? The Euro Stock. Now Euro Stock is a combination of French. This index is made up of predominantly French companies, okay, and a bit of German companies. So, okay, so this is a good indication to see whether this European market is doing well or not. This stock, again, has not been going higher for, this is the 7th month in which it has not challenged the high, okay? The record high is 5,120.4. So this index is, very few people trade it in this index here, but I think it offers opportunity. The market has been trading in this shaded pink area. To me, that is the area of lower risk, okay, in terms of risk relative to reward. I think the area between 4,981 to 5,120 offers a very strong case for going counter trend. Okay, so note that there is a counter trend in place in the monthly time frame. Okay, I want to see whether I can see the same thing in the weekly, the daily, the 4 hours. Very much like what I saw in the Nasdaq 100. Okay, because right now there are only two major index that have all the criteria that I'm looking at, meaning to say that the current price actions across all time frame is suggesting that it is superior to be looking at counter trend. Okay, so we can see this is the weekly. Weekly prices are in that range of prices. You can see that prices are within this shaded area here between 4,969 to 5,120. So again, here I will be looking for a level to sell. Again, you can see this is a counter trend in place. Okay, and if the market have a 3-wave pullback, it should easily lead prices to challenge this low here. And if this low is taken out, 4,379.4, it will flip the entire market to the downside. Okay, so I think this one is I'm very, very excited about the prospect of doing counter trend. So between the FTSE and the stocks, I think I will be looking very actively into the stocks, okay, the Euro stocks. So this is the daily time frame. You can see market is within this price action here. You can see this bracket of prices. So we have the same thing been observed in the monthly, the weekly, daily. Okay, let's go down to the 4 hours to see if the market is trading within the counter trend. Yes, the market has come off very sharply from the counter trend area. Would it have enough momentum to go back and challenge again? It may not. Okay, but here we have seen a large down move here, very sharp. We can see this bar here is very aggressive. That means to say sellers are already in the marketplace. And to go forward, okay, over the next few days, I want to see if it has enough momentum to actually challenge and go back into this bracket of prices. And that level has been contained between 5,041 to 5,071. Okay, so this bracket of prices is actually very attractive. The market comes back again in a manner that suggests the market is struggling to go higher, is actually a good candidate to consider. Okay, let me see if there's any new question being posed. No question. Now keep the question coming if you have any. So I'm going to be going over to Asia to take a look at the Asian equity markets. We will start off with the Nikkei 225. Of course, the Nikkei 225 refers to the Japanese equity markets. Now, Japanese equity market has not challenged new high for 3 months in a row. Okay, it's highly unlikely that we will see a serious challenge on the all-time high at 42,484. Considering we only have 10 days left. Okay, but again, not saying that it will not, okay, but I say the odds is not very good. So right now the price this month itself, we can see that the market actually punched above 40,000 briefly and then come back down again. So again, we have a counter trend in place in the Japanese markets on the monthly time frame, and ADX is not showing us that this thing is able to sustain. Okay, there is no momentum behind it, at least not in the monthly time frame. So we can see that happening in the weekly time frame. Prices did on Friday. This week itself managed to go above 40,000 briefly and before it closed on a weaker note. So on the weekly time frame, the market has actually challenged this bracket of prices, which is to me where I think the sellers could be hiding out. Okay. So in the daily time frame here, same thing here. Market is currently in the counter trend phase. There was on Tuesday a big markdown in prices. Okay, this is suggesting that there are sellers in the market. Now, looking at this bar alone is telling me that the market basically has a lot of seller. Okay, so this is what we call a bearish engulfing bar, very, very bearish looking. So prices has not been able to rally significantly, but again, we want to watch how price behave this coming week itself. Okay, but by and large, I think there is a very good case for also selling the Japanese equity markets. Okay, I think the sellers are already in. Okay, because of this big move here. Okay, so you can see over the last few days, market has been struggling. It has been ranging just above in and out of 39,000, and it has not been able to push higher. So again, this is also a good candidate to look for counter trend trade. Okay. Now, the one that we want to watch right now is Hong Kong, because Hong Kong has been in the news. Now, Hong Kong has come a long way. At the beginning of the year, Hong Kong equity markets has hit a bottom and has been rallying. But if you have any idea where Hong Kong market has been trading before this year, it has been very much quite negative. Nobody wants to take a look at Hong Kong market because the Chinese economy has not been doing well, and that has also spilled over into the Hong Kong equity markets. But that changed all this past few weeks. We can see there was a big move here. Okay, last month. Okay, this month we have a high. Okay, to 23,264, followed by a big downtick. Now, this is a monthly time frame. We still have 10 more days to go before the month is over. So the structure of this bar can still change. It's still not conclusive that it will end October in this manner. One way to look at it will be the weekly time frame. You can see the market actually have another surge, and this is on the back of that stimulus package. And you can see this move here coincide with the rise in tension in the Korean Peninsula. So it is no accident because it looks like the Hong Kong market is about to take off. Okay, and then something unexpected happened in the Korean Peninsula that caused capital to be hesitant to flow back into Hong Kong. Okay, so this move here is a reflection of the rise in tension in the Far East. Okay, so I think there is that possibility that the rising tension in the Korean Peninsula is engineered. Okay, so now we want to see if the new stimulus package rolled out by China is going to be able to address this pullback here. On the daily time frame, you can see very clearly. You can see that Friday there was a very positive move. So this positive move here may actually result in a continuation of the rally. Okay, there's a very good chance that that may actually happen. So we want to watch how the Hong Kong market performs in the coming days itself. I think it is looking good, but there's no buying opportunity in a sense. Okay, unless you go down to the lower time frame. Let's take a look at the 4 hours. Market is in the middle of nowhere. There is no low risk trade setup, but over the you can see from Thursday onwards, the market has been rallying. So this is all good, right? Then in the 1 hour, maybe we take a look at that 1 hour to see if we're going to get some kind of low risk trade setup. Okay, doesn't appear to be the case. Okay, prices have already made that move higher from a low of 19,892 to 20,945, and the market has gone sideways. If there's going to be any downtick, okay, look out for the area between 20,068 to the low here at 19,829. That area, the blue shaded area, could be an area of low risk trade setup, but I do not believe it will. It's highly unlikely that it will prices will decay that much. Okay. So now we are done with equity markets. Let's take a look at the dollar. Unless you guys have questions for me, let me see if you have any question. Okay, still no question. Thank you very much. Then we'll go on to the dollar. Now the dollar has been rising since the beginning of August the 1st. What happened on August the 1st? This month itself, we have seen Iran attacking Israel. So that has caused rising tension in the Middle East, which in turn has caused capital flight into the dollar. So the dollar strength can be also seen in the decline in the other currencies. Okay, you can see this is the month of October. Okay, October has come off largely, so I think it will stay down this month. We still have 10 more days towards the end of October. I think the sentiment here may continue lower, but by and large, you can see the euro is in a long-term decline. Okay, so this rebound in the euro is not so much the strength of the euro, but the weakness in the dollar. Okay, so we can say that this is a rebound, a technical rebound in the larger downtrend. Okay, so that means to say that the dollar decline is a corrective decline in a long-term bull market. So always remember the dollar is in a bullish phase over the monthly time frame. Okay, just don't be fooled by the day-to-day movements. Okay, although we have the expectation that the Federal Reserve will be cutting interest rates, but that has not stopped people from buying the dollar. Okay, and we can see that happening. You can see this is the weekly time frame. The weekly suggests that the currency weakness, okay, which is across the board, okay, is a reflection of the strength in the dollar. Okay, so we can see this move here. It does looks big, but again, on the higher time frame, this is part of a very sideways markets. Okay, the ADX is not climbing, meaning to say that there's no momentum behind this run here, so it's highly unlikely that it will run away. So this is a daily time frame. You can see that there was a bit of a buying towards the late part of the week itself. You can see Friday, there was a bit of I think, profit taking. The market has been coming down very steadily. You can see basically they are all black color bars, means that it is very directional. And this has been supported by this rising ADX. Now, if this ADX starts to pick and tilt down, which is highly likely in the early part of this coming week, then it will suggest that this phase here in which the euro has been coming down could be over, and look out for the possibility of a rebound in the major currencies, meaning to say that the dollar weakness may come in this week itself. Okay, so if you are doing short-term trading, just be aware there could be a change in direction in the dollar. Okay, this can be already seen in the 4 hours time frame. This 4 hours time frame right now, we have a counter trend in place from a high of 1.12 all the way to 108 here, and the market seems to have rebound on Friday, suggesting that that the dollar weakness is coming back into play, or it could also suggest profit taking. Okay, I realize there are 2 more questions in the Q&A. Let me have a look at them. Ken is asking, please update Bitcoin. Yes, I will touch on Bitcoin later on. Ken, I cannot show you the dollar versus the ringgit because this platform has no ringgit pair that's offered for analysis. Okay, if you want to know more, reach out to me individually. Okay, I can give you a analysis, but you got to reach out to me via WhatsApp. Okay. Right, let me go on to the next major currency, which is the sterling, which is what I call cable. Now, sterling is in a long-term downtrend, okay? Meaning to say the dollar is in a major uptrend, okay? So you can see that the bounce from 103.60 in the sterling has continued all the way to last month to 134. And this month, we have seen a bit of a pullback in the currency itself, including the sterling. So sterling this month has been weak. Okay, so this is part of the corrective rebound. Based on what we see over the monthly time frame, there's a possibility sterling may continue to edge higher to 137. Okay, do watch out for that as well. And this is the weekly time frame. Here we can see that the rebound from 103.60 has continued all the way to 134.34. And we can see over the last 3 weeks, prices seems to have come down. And that is also a reflection of the strength in the dollar. But that could be changing very, very soon. Okay. In the daily time frame, you can see that the sterling decline has possibly hit some kind of milestone here. We can see prices has been coming down, hit a bottom at 129.74, and it does appear to be beginning to climb. This is the Friday's price movement, not as strong as in the euro, but you can see that it's also shown in the sterling itself as far as the profit taking is concerned. Okay, here is the 4 hours time frame in the sterling. We can see that there's a counter trend in place. If there's a price, if this pair pulls back to 130, I think it could offer a low risk trade. So if the price in the sterling pull back to 130, but not below 129.74, then it's going to be quite rewarding to be doing counter trend, meaning to go long on the sterling. Okay, do watch out for that. Let me see the question here. Is there anything else? Okay, there's no new question. I'll continue to the next currency pair. Now, I will look at the Aussie. Okay. This is the Monday time frame, not going anywhere, but you can see the Aussie is in a long-term downtrend, and this rebound, very much like the euro and the sterling, is part of a counter trend rebound. And this counter trend rebound may not be over, suggesting that over the medium term, the dollar weakness can still play out, okay? Because this rebound in the principal currency, whether it is euro, the sterling, or the Aussie, all suggest that this move here is not over. There's a very good possibility the market may go above 80 cents to the dollar, okay? Targeting maybe 86 cents or even 87 cents. In the weekly time frame, market has gone sideways. There's no real motivation here. But if the price ever drift back to under 63 cents, you can see this very blue shaded area here. This is where I would consider to be low risk. Okay, if prices goes into this bracket, my instinct is to look for buying possibilities here. Okay, knowing that this is part of the same movement that we are seeing in both the euro and the sterling. So what we are seeing in the Aussie is also quite similar. Okay. In the daily time frame, you can see that prices has moved back, and on Thursday and Friday, prices has started to rebound. Okay, unlike euro and sterling, they only start to bounce on Friday, but you can see the bounce so far on Friday in the Aussie isn't as strong. Okay, so there's a risk that the Aussie may actually start to cut interest rate as well. Okay, so if that's the case, maybe we can see further weakness in the Aussie. Okay, there's no runaway risk here. Meaning to say that this trend that we are seeing does not look like it is going to be persisting in the same direction. Okay, and in the 4 hours time frame in the Aussie, we can see that the trend, there's no trend. Okay, and prices over this past week has actually dipped into this area, the blue shaded area, which is my area of buying. So if you have followed this based on the idea that price break into fall into this bracket of prices, this is a buying catchment area, and prices has since been rebounding. But the rebound here has not been very, very strong because the individual bars are very compressed. It doesn't have a big move. Okay, I need to see a big giant move to the upside to tell me that the buyers are in like this. Okay, this is a good indication that there are buyer in place. Okay, something like this. If I see more of this kind of bar in this kind of nature, it will give me confidence that the buyers are in, okay? Now let's take a look at the dollar versus the yen. Okay, this has been the principal currency to watch. This is the monthly time frame of the dollar versus the yen. You can see dollar strength has been very prominent in the dollar yen. Okay, dollar yen hit a high of just under 162. Of course, we knew by now there was a lot of intervention by the Bank of Japan, taking the market down to just under 140, and now the market is rebounding again. Because the Bank of Japan official has not been giving us a very firm guidance as to whether they will hike interest rates. So that has been the reversal in the dollar yen. If the Bank of Japan starts to hike interest or give us a sign that they are looking to hike interest rates, the dollar yen is going to go much lower. But right now, there isn't any sign, at least for this month. For so far, 3 weeks into October, we don't see any comment from officials from the Bank of Japan suggesting that they're going to be looking to rate hikes, okay? So this is the weekly time frame. You can see the dollar strength has come back in a very big way, at the start of October. So this is suggesting that those who have been selling now has turned buying, okay? Because the interest rate differential between the US and the Japanese interest rate is still wide, although it is not as wide as it was before the Fed cuts rates, but it is still wide enough for people to consider going back to the yen carry trade, okay? So if you have been following the news, last week I did mention Warren Buffett has actually gone back to the yen carry trade. He borrowed $1.9 billion, raised that amount of money, and I think he's going back into the market. So you can see the fact that Warren Buffett is back into the yen carry trade with a commitment of $1.9 billion borrowing in Japanese yen is telling us that the yen carry trade is not dead, okay? It's very much alive. So this will result in the dollar yen going higher. This is the dollar yen rate based on the daily time frame, and this one has momentum behind. You can see ADX has been climbing. So this stretch of prices here, although over the last few days, you can see that the individual bars are not extended like this, okay, but it's still suggesting that there is still momentum behind it. If prices continue to edge higher all the way to 154 and above, then it makes sense to consider to look at some potential short position. But until then, I think there's momentum behind this dollar yen rise, suggesting that near term, I think the dollar yen may still continue to go higher, okay? In the 4 hours time frame, let's take a look at the 4 hours. 4 hours, we can still see that the counter trend is still very much in place, okay? From the low of 139.57 to the high of 150.32. This suggests that there is still a bit more upside potential here, okay? And ADX in the 4 hours is beginning to climb back again. It peaks around here, okay? It peaks around here and then starts to retrace. You can see that the peak was around here, exactly coincide with the peak that here. Then as the ADX start to climb down, we can see that the buying stops, okay? It has consolidated for a while and now it is on the upswing again. So now this move here, suggesting that these few bars on the way down may see lower prices, at least in the near term. And if it does go down into 146.80, to 145.90, I think that will offer a short-term buying possibility here. All right, I will want to speed on, don't want to go to the other currency pair unless you guys wants to. If not, then I'll move on to energy. Now, crude oil is again in the sweet spot, okay? Long-term, on the monthly time frame, WTI crude oil is definitely on a bullish phase. This pullback from $126.47 at the peak of the war in Ukraine is actually part of a corrective pullback. Prices now are in the blue zone, which is an area which I will consider to be very advantageous to consider doing buying position, because I'm buying with the trend. This is a dominant trend. Market is rising. Prices pull back into this area. It offers me on a relative basis a very low risk trade setup. You can see that I'm already in, not in any big way, but I'm trying to scale in as the price dropped, okay? So this is the weekly time frame. Prices confirm what I already know, but somehow on the last 48 hours of trading, crude oil prices comes back down again, okay? But based on what we consider to be rising tension in the Middle East, it is always a good idea to stay long the crude oil rather than short the crude oil. Okay, so technically speaking, we are looking for levels to position for much better prices. So it is in the midst of going down, which is actually quite ideal. Right now, crude oil prices on WTI is priced below $70 per barrel. And we can see that throughout this period, $57 has been about the low price. Okay, so if the price do not break below $57, I think it's lower to buy as far as I'm concerned. Okay, and I really more or less, you can see that I bought some and then I positioned to buy some more at this area here, $65. So this is the daily time frame. Day time frame, you can see very persistent pullback. Okay, unfortunately, this bar here at $77.92 actually spoiled the technical outlook for this rally here. But by and large, prices is back into this area. I would like to consider this to be a low risk, high reward trade setup. Okay. Prices went up to a low of $68.13 and closed at $68.81. In the 4 hours time frame, again, prices are in the blue area. There's no counter trend just yet. Okay, so right now what we have here is that three-wave equality move. The market exceeded that equality move by a little bit. Okay, the ideal price is $68.85, measuring this pullback here. Okay, so now we have market hitting an important equality level, followed by what I would consider to be a potential reversal pattern. This is a doji. Okay, so if the market continues to trade higher, it will confirm that the market has bottomed out at $68.13 in the low time frame of 4 hours. Okay, so by and large, I think the outlook is actually based on even the fundamental. I would think that it is a good idea to consider looking for buying position. Now, for those of you who are trading gold, you understand that gold has traded into an all-time high again. Now, it's very rare for dollar, the stock market, crypto, and gold all moving in the same direction because these assets are meant to be inversely correlated. So we can see equity markets at record high, gold at record high, which is very unusual because gold is supposed to be a risk-off asset, whereas the equity market is a risk-on asset. But the fact that gold is climbing on the back of a rally in the Dow Jones and the S&P 500 goes to show that investors are very nervous. They want to hold on to gold. Okay, so this could also suggest that there is another set of play currently in motion, meaning that investors are also hedging into precious metal just in case because of the very, very unstable geopolitical tension around the world. Okay, so gold is at an all-time high, $2,722.50 an ounce, and there is the possibility of higher prices going forward. Okay, but we only have 10 days left towards the end of the month. Be careful if the market starts to accelerate to the upside. Just be very, very careful because I suspect there's going to be a temporary high in this month for gold. Okay, so in the weekly time frame, market is so strong right now. Momentum is suggesting that we probably will see follow-through buying. In the daily time frame, same thing is also showing me that the momentum is very, very strong. You can see ADX is also climbing, suggesting that there is momentum behind this climb here. Lower time frame, there's no chance to buy because the market didn't come back. Okay, you can see on the 4 hours, this ADX is really tearing away, and I won't be surprised market continue to go higher. But look out for a sign of reversal because, like I say, 10 days left before the end of October. I do personally suspect that we possibly will see some profit taking going into the US presidential election, which is 2 weeks away. Okay, silver is also rising. Okay, see the spot silver prices on the monthly time frame has also been rising. You can see that this is the strongest we have seen silver trading for the last, how long? I think we are looking at a time frame of going back almost 4 years. This is the highest price silver has actually closed in 4 years, okay, over the last 4 years. So this is also accompanied by a report on Bloomberg, which I saw over the weekend, that said there are 5 major US banks that are shorting the silver market, and now it seems that they are all losing money. And I think there is that attempt, okay, cap the rise in the silver prices, because silver goes into weapon production as well. And I think the weapon manufacturer could be trying to cap the price of silver. And it looks like for those who have been selling on COMEX, those positions are dying. And if they ever cut loss, it will be another run in the silver market. Okay, so if you have not already bought silver, maybe a bit too late now. Okay, so we can see in the weekly time frame, this has been very, very strong. This bar here suggests that this week itself, okay, there's simply a lot of buying going on. Okay, and on the daily time frame, we are also looking at the same phenomenon. On Friday, there was a major surge. Okay, so again, all this is telling me buyers are in the market. Okay, ADX is beginning to climb again, and this is suggesting that there is momentum behind this run. Okay, let me look at the 4 hours. 4 hours obviously is very, very strong. Okay, this is this is not 4. This is the 4 hours. Very, very strong. Okay, ADX is climbing, so suggesting that there will be higher prices ahead. Okay, I'm going to touch on Bitcoin now, unless you have other things that you want me to talk about. Let me check the Q&A first. Okay, now we'll go into the Bitcoin. This is for Ken. Now, this is the monthly time frame. You can see that Bitcoin is coming back again from a low of 49,000. Now, as we are speaking, this platform offered by INFX actually allow you to trade crypto 24/7, okay, including Saturday and Sunday. Last price traded was 68,284. Okay, so right now the price actually flirt with this what we call a VDR, a very deep retracement in the counter trend. Whether the market has enough strength to actually break above all-time high remains to be seen. But so far, we can see that across many asset classes, including equity markets, gold market, dollars coming back up again, and crypto is also being supported. So it does suggest that there is a bit of momentum behind the run-up in the Bitcoin. But Bitcoin, for all said and done, has been trading within this range. Okay, the upper limit is 73,800 thereabout to the low point of 49,000. So it's a very wide consolidation range. Okay, just be aware that the last 2 months we have seen higher prices in Bitcoin in particular. Okay. Right now, the ADX is not climbing. So this is the worrying part. If the ADX is not climbing, even though the price has rallied, suggests that there is maybe no confirmation that there is a lot of determined buyer in the market. Okay, so for those who are buying, just be very, very cautious chasing this market. Only when the market breaks 73,767.5 would I consider the new phase is in a new pattern is forming. Okay, there is still a risk between the 70,000 to 73,800. That bracket of prices here may actually brings back the seller into full force because the ADX is not climbing. Okay, and if the ADX is not climbing, it just tell me that there is not enough momentum behind it. So this is the daily time frame. Prices has already gone into this dark pink area, which is an area that favors doing counter trend. Okay. The good thing is that ADX is climbing. Okay, if the ADX climb and at some point tilt like this, okay, that would be a sign that this rally that we see could be over. So because now price is beginning to trade into the VDR area, I want to be looking at the ADX very closely. The moment it start to pick and tilt down, then for those who are very, very adventurous, you can consider trading counter trend. Let me see. I think there's a new question here. Dennis, meaning no more chance to buy physical. This is referring to precious metal, I believe. You can still buy if you are an investor buying physical metals. It doesn't really matter where the price is because if you have to buy, you have to buy. Okay. I do suggest over the long term, precious metal is in a major bull market. Okay. Although from time to time they will have a pullback. So my idea of a temporary peak in October suggests that if there's going to be a blow up rally in precious metal, especially gold, I'm not too keen to follow through. However, that may not be the case for very short-term scalping, but I am not interested to chase the market at the current levels, purely because I do expect a temporary high to be in place. And if the market do pull back, especially after the US election, then it will make more sense to be looking at precious metals on a physical basis, okay? But you have to look at gold prices based in your own currency. I assume you are Singaporean, and if you are, you want to look at gold price in Sing dollars. If you're Malaysian, you want to look at gold price in the ringgit, because what you're seeing in gold price in dollar, the chart will look very different if it's converted back into your own currency. So take your view, if you are able to look up at a price chart of precious metal in your own currency. I think TradingView do have that, okay? So you want to look at that from that perspective. Do not rely on the gold price in dollar for your investment if you are Malaysian or a Singaporean, okay? Because of that currency difference, okay? Just be aware of that. So Bitcoin, like I say, I suspect that it's going to be the possibility of doing counter trend. I'm just waiting for the ADX to actually slow down. In the 4 hours time frame, it has already slowed down, okay? The market did not follow through. So maybe the 4 hours is not very representative of Bitcoin, but I think I will revert back to the daily time frame. Prices already now very attractive, because if you look at it from this low here at 49,000, the market is unfolding in a three wave. Equality has just been hit on Friday. So now the market is losing a bit of momentum here, but the ADX has not peaked, okay? It is still climbing. I'm waiting for it to climb a bit further before it tilt down. And then that's when, if the prices is still within this, what you call it, the very deep retracement levels, I will be keen to take a look at selling. Perhaps 70,000 will be a good level to consider, okay? Now let's take a look at Ethereum. Now this is the monthly time frame for Ethereum. You can see that the price has only started to bottom out 3 months ago at 2,110, but the rally has been very, very suspect, okay? There is no real momentum behind the bounce here. So we don't see big buyers coming in just yet, okay? This is the weekly time frame for Ethereum. The market is basically non-trending. It is still consolidating, okay? Between the low at 2,100 to the high of about just under 3,000. So we can see this one, $800 to $900 range. The market is still stuck in that range. In the daily time frame, let's take a look at the daily time frame. Hang on. Daily time frame, yeah. ADX is beginning to climb, but okay, it's aided by this bar here. That is the week before. We have a bit of a run up from 2005 all the way to about 2,650, but the market is still stuck here. But the good thing is the ADX suggests that this move here may be sustainable. Okay, again, watch out for this three-wave move. Okay, three-wave move, there could be a challenge of this high at $2,817.40. Okay, this one is high here. In the 4 hours, do I see any trading opportunity? No, unfortunately, there's no trading opportunity. The market is neither here nor there. Okay, so I wouldn't suggest you to take a look at the Ethereum. Anybody else who wants to look at other crypto? I have Ripple, I have Solana, I have Cardano. Anybody want to take a look at any one of them? Maybe I'll show you one more. Maybe I'll show you Ripple. Okay, Ripple is again not going anywhere. Okay, in fact, when Bitcoin is rising, Ripple has been falling this whole month. Okay, so there is not much of interest in Ripple at this moment in time. In the weekly time frame, it is definitely not going anywhere. So looks like there's nothing to see in Ripple for now. Can we see something in Cardano? Let's take a look at Cardano before we end the session. So this is the monthly time frame for the Cardano. Cardano come in at this level. Okay, it has been falling from day one. Okay, so this product here does not have a very long history, but the moment it got traded, it has been selling off. Now that there is a counter trend in place, and the prices has been trading below 34 cents, which has been a very attractive price to go long. Okay, so prices is just basically holding at the current level. But I think it does have a very good case for those who are very adventurous. I think there's a very good chance you can still buy, because the market has not taken off yet. Okay, Cardano, okay, I don't have a lot of fundamental behind it, but looking at price action, current levels above 32 below 33 cents does looks attractive to me. Daily time frame also suggests the market is not going anywhere. It's basically quite flat. Okay, there's no real momentum behind it, but if the price do dip into 32 cents, again, it looks very attractive on the daily time frame. All right, guys, let me see if you have further question for me. I think there's a new question here. Oh, silver, yes. Silver, I think you may have already missed the boat because of what we saw on Friday. Unless, of course, honestly, I think silver, we have all missed the market. Okay, if you have not already gone long, I think you will miss it. Because right now we have news that 5 banks, okay, in the US are on the opposite side of this trade, and the silver prices has been surging. So at some point, they may have to throw in a towel and cut loss. And if they cut loss, they will have to turn net buying. And that may be another motivation for prices in silver to actually surge one more round. Okay, so again, I think silver has already moved, and it's not going to come back. I don't think it will come back. Okay. All right, guys. Anything that you want me to ask? Now, let me show you the presentation slide one more time. I'm not sure whether you can see this. Okay. All right. Now, going forward, I want to show you this. This coming week itself is going to be relatively light. Okay, the coming week is going to be light, but still it will have a lot of PMIs. A lot of places are actually announcing their purchasing managers index report. Starting with the week, we have Canada likely to cut interest rates. So that is something that you want to consider if you are in the currency markets. All right. Again, for those who are locking in and wants to come back again for the next session next Sunday, yeah, this will be something that you have to also know. BRICS session is currently in session and it will end on the 24th. Okay, so we have already gotten news that the BRICS Pay is active, meaning say that the alternate payment system, rather than trying to use SWIFT, okay, this is currently active, and this could have a long-term impact on the de-dollarization movements here. Okay, so long-term, it has already started. So the watch out for is going into the last day of the month itself. I've always, I think I did mention this many times, that there is a panic cycle coming in towards the end of the month, and not sure what will be the catalyst, but do expect the possible catalyst to come from the geopolitical front. Okay, very likely we'll probably see some kind of move in the Middle East. Okay, Lily is asking, how do I think in short term before Trump election will be horizontal trade zone, or will trending up further? I think what you're trying to ask me is that whether the market is going to rally, it's going to persistently trade in one direction, or is it going to be sideways? I think based on the importance of this upcoming election, every player is positioning for who will win. Okay. Like I mentioned at the beginning of this presentation, I think the market has already voted for Trump to win. Okay, but the US election is very, very weird. Okay, because it's not a popular vote that wins the election. It is what we call I don't know, can't remember what's the term that they use. I think it's electoral college. So the popular vote may be in favor of Trump. Okay, but if he doesn't garner enough electoral vote, okay, that means to say he can still lose the game. Okay, during the last election, Trump has the highest popular vote, but he still lost the election to Biden. Okay, so that is something very peculiar. So right now, it seems that the market has already voted in favor of a Trump win. By looking at equity markets, in particularly the banking stocks, okay? And of course, the other giveaway will be the crypto. Trump is a very crypto-friendly presidential candidate. And if he wins, many people suspect that he's going to be good for crypto. All right, this is all I have. And I'd like to thank you guys for your time. And remember to register, to look out for the new registration link. But I'm sure the fact that you can come in and for the second session in a row suggests that you may have used the same login. So if there's no change to the login details, I will see you next Sunday. I will be recording this from Kuala Lumpur next week onwards because I'll be moving to Kuala Lumpur. Okay, and for those who want a recording of this, do know that it will need to be processed and it will only be available 48 hours later from today. Okay, thank you very much for your time, and I will see you next Sunday. Bye bye.